Quick, name the most offensive four-letter word in Louisiana that starts the letter F. Nope, not that one. How about FEMA? Yes, FEMA is in the news again. The federal agency whose credibility is virtually non-existent after misusing and downright fraudulently misallocating disaster relief funds in spectacularly incompetent ways. And with this resume of tasks failed successfully, they decided that now is a perfect time to completely introduce a new rating system for their flood insurance programs. And it goes into effect on Friday. And this is one that they think is going to be more equitable and fair. Somehow I doubt it. But why would they be doing this? Ah, yes, for climate change. And we all know what happens when federal agencies start combining climate change with policies they deem are equitable and fair. Higher rates! Okay, that's not actually true for now, but let's not kid ourselves. No federal agency ever survives, or is even conceived, by reducing income. Ever! Before we get into the crazy new rating system they have for these flood insurance programs, we got to talk about today's rum. So, we have Mezan Single Distillery Rum. This is from Panama. It's pretty straightforward. It says 2006, so it's a 15-year. Haven't tried it before, so we're just going to give it a shot right now and see what happens. This one was $44, so it has a pretty steep climb to get to see if it's worth the purchase price. Get rid of some of that water there. Let's see. Ooh, that smells good. It's good, but man, it smells like it's a little on the strong side here. Let's see. It's all right. It's all right. I'm going to be perfectly honest. I'm really kind of disappointed. This one is... It has a very sharp bite on it. It does actually taste more like a scotch, actually. There's no fruitiness to it. Like rum can have a lot of different flavors. This one's kind of honed in there. It kind of tastes more like a scotch and a bourbon than it does a rum. So with that, I guess I can just say that for $44, this one is not worth the purchase price. As every rum in my house, it will get finished, but I would not recommend it going forward. So take what you will from it. If you like something that's less sweet, I guess I could say if you like a rum that's not as sweet as some of the other ones that I've had on here, you could give this a shot. But for $44, I wouldn't do it. I wouldn't do it. Okay, so back to FEMA. The new rating methodology is called Risk Rating 2.0. And what they're doing is, whereas old flood insurance used to be rated primarily based on the flood zone you're in and the elevation of it, now they're using like a myriad of factors and variables that they've determined through their investment in technology to determine what your new flood rate's going to be. These are things like flooding frequency, multiple flood types, meaning where the flood comes from, rivers, storm surge, heavy rainfall causing drainage backups, etc. Distance to a water source, and property traits such as the elevation and the cost to rebuild. The stated goal of FEMA is to, quote, equitably distribute premiums across all policyholders based on the value of their home and the unique flood risk of their property. Currently, many policyholders with lower value homes are paying more than they should, and policyholders with higher value homes are paying less than they should. For me, this is where I'm skeptical as this is actually going to do anything. Lower value homes are probably have higher premiums because they have a higher risk of flooding. Conversely, a higher value home may have a low risk of flooding, which is why their flood premiums tend to be lower. So as a real estate agent, my job is to assess value for buyers and sellers, I can make the argument that one of the fundamental factors of a property's value is the risk that the property can flood in the first place. With this new rating methodology, some folks are going to see their annual flood insurance bills go down probably, a couple of bucks. But for the vast majority, they're going to go up about $10 to $20 per year, which doesn't seem like a lot depending on what you're paying now, but that's just the tip of the iceberg. Because FEMA is going to keep their promise of raising rates every year to the tune of up to 18% per year until the flood insurance premiums reach what they have determined to be full risk coverage. So while some may benefit initially right now, let's not kid ourselves. It's going to take just 1 year's increase of 18%, or maybe not even be that much, to wipe out whatever that discount was this year with this new methodology. Here's my point, and I think this might upset a couple of people. By setting out to charge more for the low-risk properties and less for the high-risk properties, you're not actually solving anything, or even worse, you're not actually making anything more equitable and fair. This is wealth redistribution. I said it. This is an attempt to recapture all the wasted dollars FEMA has because they're broke. And what they're going to do is redistribute these higher premiums they're getting from the low-risk people, and they're going to distribute it to the higher-risk people because they're going to be the ones that get flooded more often. And then those that have paid more but have a lower risk are not getting any more benefit from their flood insurance policy just by paying more. Now, I have two solutions for FEMA's woes with this flood insurance thing. Now, they've never contacted me for my opinion or my advice on how to solve their problems. But I figured I'll share it with y'all. And, maybe we at least get this conversation started to see if y'all agree, if you have other solutions to help with this flood insurance disaster that they've created. Now, my first solution is rather simple. Stop wasting money. Be accountable. This is actually pretty elementary. Simplify the claims process and distribute disaster relief funds in an orderly and accountable fashion. Outside of the insurance claims that are really difficult to get done, don't just write checks to send them out to whoever applies for them willy-nilly and just call it a day. I understand that, this solution would require some sense of morals and ethics and, maybe a desire to be a good steward of the taxpayers' dollars, which probably why it hasn't been tried in the first place. My second solution just would require a massive admission of failure. And that's just to get out of the flood insurance business altogether. Just get out. Just take your ball and go home. And then just in its place, let the private markets compete and absorb the risk of flood insurance. We have hurricane deductibles, we have wind and hail deductibles, we have earthquake deductibles. Just factor in flood insurance as well. And that's how you create equity. Everybody that has a homeowner's policy is going to have coverage for flood insurance, and it's distributed equally. And then FEMA can end up being like a legit, true disaster relief administration, organization for on the ground, on the spot, in the moment assistance to those during natural disasters. It's almost like if they just focused on one thing, they could probably do it really well. There are many more details about this risk rating method 2.0 that I could discuss or take aim at, especially as the new rates start being rated under this new method. But I can tell you right now, I've already seen it. I had a flood zone X policy, which is a preferred rate. That is someone that is not in the flood zone. That normally is charged $520. It's kind of a standard rate. Under the new method, it was rated at $964 a year. Sounds delightful. That's all I have for today. Thank you guys for watching. If you found these videos fun and informative, just do your boy a favor. Just hit the like button and subscribe over here. And if you want to see some more rum and real estate videos, go ahead and check them out over here. Thank you guys for watching, and see you next time.